Good morning, traders. It is Wednesday, January 22nd. We're 50 minutes into trading. Let's see what the market's doing. Got the S&P 500 grinding higher. It is just floating higher. Every day we see a little gap higher and then a compression. You can notice that on the chart by these tiny little intraday bodies, which means that the closing price is very close to the opening price. The tail means that we do move around a little bit during the day, but not very much. And we're seeing another one of these gaps higher and a compression this morning. As long as we've got this longer term uptrend intact, I think we're in good shape. We can draw that trend line, start it right here, draw it right here, and you'll see that it intersects at about the 327.50 level on the SPY, and that would preserve this little bit of a breakout. So I'm expecting us to come back and check at least that level, and we'll also find support on that upward sloping trend line. Below that, we've got support at 325. So those are the two support levels that you want to watch on the SPY. The news is generally very good. We've got the trade deals. Brexit seems to be moving along. Nobody cares about the impeachment. We had the coronavirus yesterday spook investors a little bit. Market came right back in. The bid strengthened. Not an issue. So we'll go into a 5-minute chart and see what's happening there. I've got the 10P indicator up. This is the best indicator you can use for trading. You can see yesterday on the open, lots of tails above body here, heavy resistance level around that 331.40 level. We've got 10P gradually coming down. We get a decent little cross right in here. This breakout was one of the trades that you could have taken yesterday. Very nice move. So we start to stall out a little bit. Start to see a few tails above body here. A long red candle tells us that we could be hitting some resistance. Market not able to go back up and check that high, which was actually the high from Friday as well. So now we know we've got a little bit of resistance forming. Well, lo and behold, there was some type of press conference with the coronavirus in here that spooked everyone. The reality of it is that the market was already getting pretty weighty up in here. So we had this long red candle here, and there you can see the 10P crossover. That tells you should be bearish right in here. Little short position. So here's how I'm using this information to day trade. When we've got the bullish cross down here, you should be lining up your bullish stocks right here. Use the relative strength searches, find the stocks that are powering higher, and when we start to get this crossover and we start to break out, that tells us all systems go. Green light. Buy your stocks, be long. You run up here, you get a bearish cross, the market rally starts to stall out, you're hitting resistance, take profits on your long positions. Does this mean go short? If you're a nimble day trader, sure, you can short. But for most people, that's the lower probability trade, and I suggest using half of your size on the short side as you do on the long side. You want to lever up. The market's been very strong. You want to favor the long side. So when you get these pullbacks, if you choose not to trade the short side, that's okay. This means go to cash for a little while. Keep watching your stocks. Watch for that relative strength. Put that 10SI indicator up that shows you relative strength, and you're looking for stocks and you're looking for that indicator to stay above zero. As the market comes in, you know when it finds support, those are going to be the stocks that power higher. And I'll give you an example in just a second. So we've got 1, 2 tests, 3 tests. So this is a nice support level. You start getting your 10P cross in here. This is where you want to start buying those stocks again. Buy in here, you can buy in here. The market's not going to stand in your way. You get a nice little lift off right in here, which is worth some decent price action, some upward momentum. These stocks should move higher, and then all of a sudden we get a negative cross right in here. Take your profits. That's how you day trade. Now on a swing trading basis, much different. I'm going to show you a few swing trading ideas as well this morning. Here's what the market is doing currently. We see nice rally up to the high, long green candles. That red candle is a warning sign. Tail above body, tail above body. We pull back almost to the opening price level. So I believe we're going to see a little bit of sideways action here. I think that this resistance level is going to hold for a while. The market's going to pull back. It'll test that support level again, which incidentally, you can see how the support from the high yesterday is holding. So that was the high yesterday. That's a support level. A little bit higher, higher low. Those are all good things too for the market. So got the 1OP cross coming in here. Probably going to see some resistance. Wait for that market to come in. Wait for a cross like that off of a deep trough. That'll tell you that the market has gathered enough steam to have a meaningful breakout and that you should load up on your really strong stocks. So while I'm doing the video, I'm going to keep this SPY chart up in the background so you'll see that 5-minute chart updating. I like to do this anyway so that I always know what the market is doing because the market drives every decision that I make. So I'd mentioned that I was going to show you an example of stocks that you would want to own during the course of the day when the market is starting to show some weakness. So we'll go into a 5-minute chart of BYND. You can see the daily chart there was very strong. Here's what I'm talking about. I'm going to overlay the SPY, and you'll be able to see here's the S&P 500 starting to run into trouble, okay? Stock barely even pulls back. You get a tiny little pullback in it. As soon as the market finds support, the stock takes off. And that run was a really, really nice one for BYND. So these are the types of setups that we're looking for. You get that market peaking, you get it stalling out, the market starts to really pull back hard. Which stocks are holding their own? Well, that's easy for us to find because we go into the bullish search, we put up relative strength 30 in option stalker, and then we start flipping through these candidates looking for stocks that are powering higher. Now I'm going to put up the SPY overlay, and here's an example. Market pulls back. What does the stock do? Look, it's treading water right here. It's not pulling back. It's holding gains that it made on the open. As soon as the market starts to improve a little bit, what does the stock do? Like rocket fuel, right through the high of the day. Boom. That's how we trade. That's how we day trade. So let's go through and take a look at a few stocks that I think really set up well for some day trading today. They're easy to find. I'm going to take off that one, the SPY indicator. BYND had some early strength. I liked it. Take a look and see what it's doing today. It's been able to hold the opening gains a little bit, but you see it's still at resistance from yesterday. But on a daily chart, you can see it has been a really, really strong stock. You can see that long green candle yesterday, and the stock is able to hold these gains right here that were made yesterday. I think the stock is going to continue to move higher. It may rest today and then, boom, make another move higher. A lot of short covering going on here. You can see based on the volume there. Abbott. And I'll show you how I found that stock. Abbott posted earnings after the close, before the open today. Very, very strong. Caught this one in the chat room early. Had a couple of long green candles closing on their high. I was in here. I took profits right up in here. Had enough of a nice gain on that one. This stock should move higher. You can see the long tails under body and the breakout. Super easy to find this because we have a search that looks for stocks after earnings. Big breakout there and nice long green candles going into the number. So we come in here, after earnings, bullish search. Those are your candidates. There are only 3 today, but guess what? As earnings season cranks up, you might have 5 or 10 or 20 to pick from. Boom, boom, boom. Flip through the charts, look for those breakouts, look for those long green candles closing on their high on a 5-minute basis. If you get 2 or 3 of them in a row, that is money. Buy it. Just get in the stock. You almost have to buy stupid sometimes on the open. You're not going to get much of a pullback when you see those formations. So I'm going to go in, take a look at COF, see what it's doing. You saw that really nice breakout. So here you've got an example, almost 2 long green candles, one on top of each other. Stock, long tails under body, trying to get through that resistance. What do I do with that? Click on this, double click. Now I'm going to know if the stock gets through that high. IBM, another one. Big breakout today. It's starting to find some support. Now let me give you a little bit of a day trading lesson here. If you get a stock that moves higher like this and it takes out the low of the day, this opening price, bad, 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 bad. Then you know the stock is going to continue to fall back and it's going to have a number of little short bounces on the way, which, excuse me, a little couple of bounces on the way, which are shorting opportunities for you. You want to avoid the stocks that gap higher and give up that gap and start to fill. Those stocks probably are not going to move higher until very late in the day. Here, we're able to preserve half of this long green candle, and that's good. That support level needs to hold, and then IBM can move higher. So I don't like to see these retracements. I like nice long green candles moving higher, the stock having tiny little dips, and then continuing to move higher. Okay, so we had a little bit of an alert on COF, and that currently was triggered, and that's how that works. That alert line that I drew right there, there's my alert that tells me, hey, COF, you might want to watch it for a long position here. What do I do to manage the trade once I'm in this? Very easy. Click on alert, click on a candle like that and a candle like that. Now I've got an auto-generated up trend line, and I'll get an alert when the stock breaches it. If I get that alert, I know, hey, I might want to get out and take profits on that trade. So we already took a look at COF, IBM, Abbott. Let's take a look at the bearish side. We're looking at after earnings searches right here. We should have a couple of candidates on this one. I believe, actually we don't have any candidates on that. We had some selling in Netflix earlier. Netflix posted very mixed number, poor guidance, but an actual beat for this quarter. You can see how the stock long tails under body is starting to rally a little bit here. So not a real clear direction on Netflix. J&J. J&J, we have a similar pattern. Big trough, stock starting to bounce. You can also see in the background here the S&P 500, long green candles closing on their high, trying to challenge the high of the day right now, still finding some resistance. So again, I don't advocate shorting for most of you. Right now, this is an extremely, extremely difficult market to short in. If we start getting a slew of earnings reports and the market is very bearish, we're making new low of the day after an hour of trading, 2 hours of trading, the momentum's starting to build on the short side, bullish speculators are starting to get flushed out. Absolutely. In that market environment, we definitely want to be looking at shorts. I'm not seeing it right now. That could change any day as earnings start to come out. So let's focus on the long side, take a look at a few more stocks that I think really look attractive from the long side. Tesla has been a rocket ship. That stock is just powering higher and higher. This is a nice formation. Remember how I said you want that gap to hold? There's your low of the day. It holds. Now it makes a new high, comes back, checks, finding support. This stock looks like it's still poised to grind higher today. W was a big stock that moved higher right out of the gate. This is kind of a choppy one too. You can see on the daily basis, I like those long tails under body. You can see how the stock has filled in this gap. It's above the 100-day moving average. It got flagged in our videos last week when it broke out here. So this stock wants to move higher on dips. It's a volatile one. You have to buy dips on some of these stocks. Take a look at the previous price action. Long tail under body, tail under body, tail under body. I think this stock gives us a little bit of a pop right in here, maybe to 110.40 or so. But I think this is a pretty attractive level to buy it at. It's close to the high from the prior day, so not a lot of downside risk or exposure on that one. I think this one wants to go. Shop was another one that hit the screens early this morning. Some of the searches we saw it on. Nice. I bought this, sold it for a profit right in here. It's continuing to go, checking the bid the whole way. Surge, check bid. Surge, check bid. Surge, check bid. So as long as this uptrend line is intact, I like it. Market right now, still trying to get through that resistance level. We're starting to see some tails under body here, so maybe it'll be able to power through. I'm thinking it's still going to take time. So let's go in and find a few other stocks that might look good to us, and then we'll call it a day. I also want to show you one or two searches very, very quickly for those of you who are swing traders. Texas Instruments. So Texas Instruments reports after the close today. How do I know? There's an A right here on a 5-minute chart. If I go to the weekly chart, or excuse me, the daily chart, I'm going to see the same. Earnings after the close. If you see a B, that means earnings before the open. Really nice breakout here. Only thing I'll say about Texas Instruments is that stocks that report after the close or before the open the next day tend to be pretty choppy. So you don't tend to get a lot of big sustained directional moves unless there's some news that's leaked out on it. But I don't see that that's the case with Texas Instruments. I would say you're probably better off seeing if you can catch a little bit of a reversal in here sometime on a really nice strong rally like that. There will be two-sided action for the most part on these stocks. Intel, very nice breakout through horizontal resistance. This stock is gaining momentum. Long candles, long green candles closing on their high. Daily chart, breakout. Love Intel. Earnings, when do they post? 123. So tomorrow, Intel, really big, sets the tone for the entire tech sector. So I wanted to show you, I'm going to conclude with a couple of stocks. I'm running a little bit long. Excuse me, I'm going to conclude with a couple of searches. So, strong after earnings. This is an incredibly great search because stocks don't always show their true colors right after the earnings announcement. They do 2 or 3 days later. This search watches for those gaps higher. It watches for stocks that have preserved that gap and are continuing to move higher. LEN reported earnings 2 weeks ago. Look at that. So you may not have seen it the day of, and I'll tell you for sure you didn't because I was in the stock. I saw the number, I saw the run up, and I thought, yeah, this stock wants to go. It's above the 100-day moving average, so I sold a bullish put spread at the 100-day moving average. Lo and behold, the stock put in 2 weekdays after that earnings, so it would have been off of my radar, gone, done, don't give it a second look. But I did keep an eye on it because I had a position in it. It was also in this search. If you would have seen this long green candle on this search, you would have been in that trade. It happens all the time. That's why I created this search. So strong after earnings is going to be an incredible search for us to come back around and sell bullish put spreads on stocks that reported great earnings, moved higher, and have been able to preserve those gains, sell those bullish put spreads below support. I'm seeing the market trying to get through this resistance level right now. Looks like it's got a good head of steam right at the moment. So strong after earnings, very, very good. And I'm going to show you one other search, and that is the buy into earnings search. So all of these stocks are going to report earnings in the next 2 weeks, and they have a 75% chance of rallying into the number. So we can use some additional filters. You can see, well, Intel reports tomorrow, Baxter, Amazon on that list. So these filter out according to if they're on a buy signal currently on a daily basis, a 2-hour basis, a 1-hour basis. Knock through these lists, use these filters. These are going to be your best prospects. Sell those bullish put spreads. The stock can go down a little bit. Sell the bullish put spread below support. Stock can go down a little bit, stay flat, move higher. All of those scenarios you win with a bullish put spread. Just make sure that those bullish put spreads expire before the earnings announcement. You set that trade up. You have a 75% statistical edge in that. Plus you've got a market tailwind. Really, really great strategy. That's it for today. Sorry I ran a little bit long. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.